If you're thinking about getting an HSBC mortgage, it's worth understanding how HSBC fits in the market and whether the bank could be a good option for you. My name is Aaron Strutt from Trinity Financial, and I am going to talk you through some of HSBC's mortgage rules and USPs. At Trinity Financial, we place many of our clients with HSBC for intermediaries. Lots of them are first-time buyers, home movers and remortgaging customers, often raising capital for home improvements, also higher earners looking for decent rates from a solid bank. We even help overseas buyers, people paid in foreign currencies like euros or dollars, and buyers purchasing unusual properties like rural country homes to get access to HSBC's consistently cheap mortgages. If you are on the hunt for a mortgage, HSBC is a lender well worth considering because it offers competitively priced mortgages and is a well-known high street name with a strong reputation. But as with any lender, the right fit depends on your income, deposit, ongoing credit commitments, credit profile, and the type of property you're buying. Without doubt, HSBC is one of the leading high street mortgage lenders that offers decent 2 and 5 year fixed rate mortgages plus 2-year Bank of England tracker mortgage products. The bank often has great options for higher earners, first time buyers and next time buyers. The key point is that eligibility and product choice aren't one size fits all. Factors like your deposit, income, credit history and employment setup all affect how likely HSBC is to be a strong option for you. A good broker will assess the market to confirm the most competitively priced rates you can access and the lenders that can provide the amount of money you need to buy the property you want. Using a broker like Trinity Financial can be the difference between getting a sufficiently large mortgage or not, especially if your finances are a bit more complex than normal. When you're looking at an HSBC mortgage, it's not just about finding a rate, although it has some good ones, but about finding the right mortgage solution to fit your circumstances. At Trinity, we have access to some great contacts at HSBC and the top banks in general, which means we can get mortgages agreed quickly and efficiently. A good broker can look at your circumstances, explain how HSBC's criteria may apply to you, for example, and spot any issues before you submit an application or even apply for a decision in principle. They will check the property you are buying and give you an indication as to whether it is likely to pass the bank's valuation checks. They can also compare HSBC with other lenders, package the case properly so the bank comes back and asks fewer questions once the mortgage application is submitted, and help you avoid choosing a mortgage that looks good on paper but isn't the right fit in practice. That kind of guidance can be especially useful for first-time buyers and anyone with a more complex case. HSBC consistently offers many of the most competitive mortgage rates for all types of borrowers. Its main competitors to top the mortgage best buy tables often include Nationwide Building Society, Halifax, Barclays and NatWest. So while HSBC may be a very good option for many borrowers, the strongest option will always depend on your individual circumstances. We are increasingly speaking to clients who need flexible mortgages without early repayment charges or income stretch mortgages to help them get a sufficiently large mortgage. We speak to adult children who need to tap into the bank of mum and dad with things like joint borrower sole proprietor, which have replaced the now old-fashioned guarantor mortgages. So here are some of the top HSBC mortgage USPs that stand out for Trinity Financial's brokers and our clients when they are looking for residential mortgages. HSBC for intermediaries has a high-value mortgage service for larger residential loans over £500,000. This service includes specific loan-to-value tiers for mortgages above £1 million and can be useful for high earners, London buyers and clients arranging larger remortgages. This service includes specific enhanced loan-to-value tiers for mortgages above £1 million and can be useful for high earners, London buyers and clients arranging larger remortgages. HSBC offers strong, large loan and lower deposit mortgage options. The bank tends to offer its cheapest rates to home buyers with a 40% deposit, but its 25% deposit rates are also competitively priced. HSBC offers enhanced affordability for eligible Premier customers. Some Premier borrowers may be able to borrow up to 6.5 times single or joint incomes, giving higher earners more borrowing power where HSBC's affordability and criteria requirements are met. This is subject to a £100,000 minimum income or £100,000 in savings with HSBC. This is one of the most generous affordability calculations in the mortgage industry, but clearly it is not available to everyone. The bank has a competitive mainstream residential mortgage range. It offers fixed rate and tracker mortgage products across different loan-to-value bands, including options for first-time buyers, home movers, and remortgage customers. Some mainstream HSBC mortgage products are available up to 95% loan-to-value or with a 5% deposit. HSBC offers energy-efficient home mortgage cashback. Eligible residential customers buying or remortgaging properties with an EPC rating of A or B may qualify for cashback incentives, but this subject to HSBC's criteria. HSBC gives borrowers a choice between fixed and tracker mortgage rates. Fixed rates provide monthly payment certainty, while 2-year tracker mortgages may appeal to borrowers who want more flexibility if interest rates fall. HSBC tracker mortgages have no early repayment charges. This can give borrowers more freedom to make unlimited overpayments, repay the mortgage early, or switch to another mortgage product. HSBC fixed-rate mortgages usually include a 10% annual overpayment allowance. This means borrowers can typically overpay up to 10% of the outstanding mortgage balance each year before early repayment charges apply. HSBC has a useful variable income policy. It can consider regular overtime, bonuses, and commission for affordability, with up to 60% of the average income from the last 2 years potentially used in the mortgage assessment. HSBC can support some more complex mortgage applicants. Its criteria include policies for foreign nationals, foreign currency income, contractors, landlords, and company directors. For company directors, HSBC may consider salary plus the director's share of average net profit after corporation tax, subject to policy and underwriting. The bank also offers interest only and the option to take mortgage balances on different rate types. For example, if you have a £100,000 mortgage, £50,000 could be on a flexible tracker rate and £50,000 on a 2-year fix. This provides more flexibility. So if you're considering an HSBC mortgage, it often makes sense to use a good broker. Currently, around 87% of all mortgages written in the UK are submitted to banks and building societies via brokers, according to the Intermediary Mortgage Lenders Association. This number is also set to rise over the coming years. The key takeaway from this video is that HSBC may be a strong option for first-time buyers and other borrowers, but the right lender and the right rate will always depend on your individual circumstances. If you'd like tailored advice, Trinity Financial can help you assess whether HSBC is a good fit and compare it with other options across the market. If you'd like to find out whether you qualify for a mortgage and how much you can borrow, speak to Trinity Financial. Our brokers can help you compare the mortgage market and find the right mortgage that fits your circumstances. Please note, the information in this video was correct at the time of publication, but it's subject to change. It is also for general information purposes and is not advice.